the Gould Mine podcast.
Dan, welcome to the Gould Mine.
Thank you, Danny. Thanks for having me on.
Of course, and you know, kind of in prepping for this and seeing some of the shows that you've been on before, it caught my attention that you were also once a Californian, right? So, talk to me about that origin story, right? Because you were here in California, in the Bay Area, like myself, and then you make the move over to North Carolina during the pandemic. So, kind of walk me through what inspired that move, especially in your investing journey, right? Like what in your investing journey kind of like inspired the move from California over to North Carolina?
Sure. I moved to North Carolina in 2020. I'd say it was largely a family kind of personal lifestyle move. So okay. I lived in California for about 20 years, 2000 to 2020. And I really enjoyed my time there. It's a great place, beautiful place. But in 2020, pandemic hit. There was some wildfires in the area. Kids weren't going to school, etc. We just decided to make a change. I was working remotely at the time, so we had a lot of flexibility. So we decided to make a change, just lifestyle change, and move out of California to North Carolina.
I don't blame you,
man.
So
it wasn't as related to the investing as it was just lifestyle.
Yeah, multiple times over the last couple of years, I've had one foot out the door for sure. It's probably coming to a close here pretty soon, my time in Cali, but that's interesting. So you started investing in single family homes here in the Bay and eventually transitioned into multifamily. So kind of walk me through that investing journey.
Sure, Danny. Started buying rental properties in 2011. And it was obviously, in hindsight, a really good time to buy. There had been a big price correction, right? And so I was able to pick up several condos that were good, good rental properties. And then a few years later, things started to rebound. The prices started to rebound. It didn't make as much sense to buy more in California. The ones I did buy, they worked out great. Then I started to buy out of state. So I started to build a kind of a small rental portfolio. Bought some in Texas, several in Utah, several in Idaho, a couple other places. So built up a portfolio of close to 20 units.
Okay.
Many of these were triplex, duplex, fourplex varieties. So there was some economies of scale, small multifamily, but you can still get the conventional financing, which is very favorable, right?
Mm-hmm.
So then in about 2019, started to question, is this going to scale? I didn't see myself getting to maybe 40 units. The economics were working quite well, but it was becoming more passive than I had maybe anticipated, right? To keep track of everything, and to when you wholly own things, you gotta take care of certain things, right? Even if you have property management in place, there's a certain amount of work involved. So at that point, I started to pivot and got involved in private equity deals, syndications, and that allowed me to kind of scale out and make investments in a lot of other places and a variety of asset classes, primarily multifamily. But I like the model because it's completely passive. And you can kind of diversify your investments, in different cities, different neighborhoods, et cetera, right? So it's a good way to scale more passively. That's what I found.
And you were, when you say you were investing in these, you were investing as an LP?
That's right. Initially, I was an LP. Yep.
Gotcha. Makes sense.
And more recently, in the last 18 to 24 months, I've now kind of transitioned to the GP side of things.
Love it, man. That's awesome. So one of the questions that kind of came up in that, because I'm curious why you chose to invest. You had several markets that you were investing in. You said Utah, Texas, Boise, like all of these different marketplaces. Why did you choose like so many markets instead of just focusing on like one or two? What was it that kind of like inspired you to do that?
Yeah, I think part of my investing thesis has always been kind of looking for markets that are high growth, right?
Mm-hmm.
They have strong population growth, job growth, economic kind of tailwinds. So certainly I think Boise and Salt Lake City fit that bill. Plus they're a lot closer to the West Coast, and I was there, right?
Yep.
So I guess I got fortunate to find some good properties there, some good opportunities.
Yep.
And kind of got in on those before things really kind of took off in those metros during COVID and post-COVID, right? So now if I were to try to, look at deals there and pencil them out, they don't make as much sense, right? It's hard to make cash flow there. But because I got in several years ago, those have turned out to be great. And so again, the trajectory of those markets was appealing to me. A lot of people were moving there. There was high growth. Economic activity was strong. Texas, of course, there's no, mystery that Texas is doing well. So I put some chips there. And then I bought a couple in Kansas City, but I had family there. So I was there on a semi-regular basis. Uh-huh. And it's more of a steady Eddie market. So part of it was diversification, right? And in all those markets, you could make some level of cash flow that you couldn't in California, right? That's why we're not a state.